and welcome friends to this second session on institutional sources of finance in rural areas. Up till now we have discussed the role of NABARD, and then we talked about its consultancy subsidiary NABCONs, and then we have discussed the role of various banks, the cooperative banks and the commercial banks and regional rural banks and the land development banks. We also had a chat about the lead bank scheme. Now we are moving on to the other sources of institutional finance, and which includes the non-banking financial companies. Now these are companies which advance loans only. They only provide loans. They cannot accept deposits, and that's why they are called non-banking financial companies or NBFCs. So they are not allowed to accept deposits. So you cannot start a saving bank account there. You cannot open up an RD account, recurring deposit, or a fixed deposit account there. They are not meant for that purpose. They are only going to provide you credit facilities. They are only going to extend loans to you. So this is why they are called non-banking financial companies. Now the main objective behind having non-banking financial companies are still there are so many areas in India which are untapped by the banking network. They are not part of the banking network as such. They are yet to be accessed by the banking network, and that is why it was thought that NBFCs, which are generally in the private sector, they are going to be a good avenue to provide credit services in such unbanked areas where the residents find it difficult to access credit. Right, so that is why they have been encouraged by the various regulatory agencies, including RBI as well as the government. However, since these financial companies, they cannot take deposits, which means all the money that they are going to lend to the beneficiaries, that money has to be able to generate them a good amount of interest so that they can survive, and that is why generally the interest rates are generally higher than in banks or than in other kind of financial institutions, including the cooperative banks, including the RRBs. So they generally charge a higher rate of interest, but then again, I'm not saying that there are no exceptions. Generally, however, their rates of interest are higher than the rates prevalent in the other banks, rates offered by the other banks or other financial institutions. Some of the prominent examples of non-banking financial companies in India are the Ujjivan Financial Services, then we have got the Indostar Capital Finance, and then when we have Edelweiss Finance and Investments. Right? So non-banking financial companies are also being a very productive source of extending the credit reach to the rural hinterland of our country, and they've been providing loans to those parts of the area which are not yet fully covered by banks and their private counterparts, the PSU banks and the private counterparts, and that is why they have gained importance as far as our rural areas are concerned. Now we are moving on to the farmer service societies. What are farmer service societies? Basically, these kind of service societies, they are meant to provide some kind of services. That is why they are being termed as the farmer service society, and they are going to provide the services to the farming community, to the farmers. They are basically organized by the commercial banks. They could be organized by regional rural banks, central and state cooperative banks. So basically, they are organized by these entities which are part of the banking sector, and they are generally set up blockwise. So the commercial bank or the RRB or the cooperative bank which is organizing these kind of farmers service societies, they will set up these societies blockwise. For example, just to give you an example of what we mean by block, in Pithoragarh you would see that most of the area in the main town area falls under the bin block. So we've got the bin block. So likewise, farmer service societies are arranged, they are organized, they are set up blockwise. Now, what are the services provided by them? Number one is credit services. They provide short-term and medium-term credit to the beneficiaries, which includes farmers. And then, apart from that, they also provide non-credit services. So, apart from extending advances, loans to the beneficiaries, they also provide them other services, which includes, have a look, supplying of agricultural inputs many a times at concessional rates, because they buy in bulk. So many times the farmers may require some agricultural inputs. These could be seeds or pesticides or fertilizers. So these are provided by these farmers service societies, and hence they are known as service societies, farmers service society. They provide their service to the farmers. Then agriculture extension service. Now this is an important term. What do we mean by agriculture extension services? See, you know that India's oldest agriculture university was founded in Pantnagar, which is basically in the Kumaon region of Uttarakhand, right? And you know that in such agriculture universities, a lot of research and development takes place. These scientists and the academicians working there, they develop new varieties of seeds, they develop better technology to irrigate the fields, for instance. They come up with fertilizers which have more nutritive value and which are less polluting. So they come up with these innovations. However, if these innovations remain in their lab and they are not used in the fields by the farmers, then these innovations are of no use. They are only going to be relevant when once they have been developed in the labs, they are also being practiced by the farmers in the fields. And for that, what will have to be done? The farmers will have to be provided training on these kind of new technologies. They should also be provided access to the highly developed varieties of seeds that have been produced in these universities. They will have to be provided training on the correct time to sow the crop, sow the seeds, and on the correct manner of harvesting the crop. So all these trainings, all these skills have to be imparted to the farmers working in the fields, and the farmers working in the fields, they will have to be made aware of the new technology which has developed, or the new approach which has been developed by these universities. Then only these universities would be able to assist in the development of the farm sector, right? And this is what we mean by agriculture extension services. Providing training to the farmers in the new techniques which have been developed in the labs, which have been developed in the institutes, which have been developed in the agriculture universities. So all these new technologies which have developed, all these new methodologies which have developed, the information regarding them has to be passed on to the farmers, and the farmers have to be trained on using those new technologies and new methodologies. And this is what agriculture extension services mean. And farmer service societies, they actually provide these kind of agriculture extension services. Means they help in training, they help in making the farmers more aware about new technologies, they help in skill enhancement of farmers so that they can use new technology, they can use the new approach of sowing seeds or harvesting the crop. So these kind of trainings are also arranged by the farmer service societies. Again, marketing extension services are those services through which the farmers would be able to market their product in the market, brand their product, package it well, create a brand for themselves, and be able to sell that particular product under their brand name in the market, so that slowly the brand name gains enough recognition and the farmers are able to charge a higher price because of the quality that the customer attaches their brand with, right? So these are marketing extension services. Basically, in very simple words, you can say providing training on marketing skills is basically marketing extension services. So farmer service societies also do that. Then let us talk about crop insurance, and we'll understand why we are talking about crop insurance, because this is very, very different from credit facilities. But we'll have a logic for that as well. We'll have a look at the rationale why we are discussing crop insurance here. Now, what is the advantage? What is the benefit of crop insurance? Number one, it stabilizes farmer income. The farmer is assured of income. If the crop does well and he is able to sell it in the market, naturally he'll earn something. If the crop does not do well just because of any natural calamity, it could be flood, it could be some natural disaster like the cyclone that struck Bengal and Odisha a few days ago. In that case also, the farmer is now assured that he will get something. And what will he get? he'll get the insurance amount if his crop fails, right? So he'll be paid the insurance amount, and that in that sense the farmer income becomes more stable. Now he's more assured of a stable flow of income, right? So this is one benefit. Second benefit is, you see, we have discussed this point that whenever the crops are harvested, the farmers basically sell them in the market, and at this point whatever they earn, part of it is spent in investment for the new cropping cycle. So let's say they've sold the rabi crop in the market, so part of the money that they will earn will be spent in buying seeds or maybe buying agricultural implements, so that they can invest in the next cropping cycle, which is the Kharif or the Zaid, for example. However, what if the crop fail because of any natural disaster, because of maybe, let's say, excessive rainfall, because of drought, excessive dry weather conditions? In all these cases, again, since the farmer has already got his crop insured, he would be paid the insurance amount by whichever company has insured him, and in that case he will be able to use part of that amount to invest in the next cropping cycle. So his investment in the next cropping cycle is also safeguarded from the vagaries of nature and from any kind of failure of the current crop. So whatever happens with the current crop, he can still invest in the next crop cycle. Again, another benefit is that crop insurance maintains flow of credit for agriculture investment. Just like I said, if the crop fail, even then the farmer will be given the insurance amount. He will be paid the insurance amount, and this money then can be used for investment in the next cropping cycle. So in that sense, crop insurance is beneficial, and in that sense crop insurance also acts as some kind of asset that can be utilized for the next cropping cycle, which can be utilized for investment in agriculture, right? And that is why we are discussing crop insurance along with rural credit or agricultural credit. Fine. Again, as far as the crop insurance markets in India are concerned, you know that there are two types of insurance firms, life and non-life. Non-life are also called general insurance firms, which provide motor vehicle insurance, or let's say property insurance, travel insurance. So these kind of services they provide. They also provide crop insurance. So we have got general insurance firms here in India, and these include companies both from the public as well as the private sector. New India Insurance is one such general insurance firm in the public sector. Then we have Oriental India Insurance, again in the public sector. So these are the general insurance firms which are there, which are providing insurance to the farmers. And now let us have a brief look at Fasal Bima Yojana 2016. Now this particular scheme came to being in the year 2016, and what is this particular scheme all about? Basically, it is helping the farmers, it is assisting the farmers in getting their crop insured, right? So if the crop has to be insured against any natural calamity, some kind of a disaster happening, or maybe against crop failure, then the farmer naturally would want to go for some kind of a crop insurance, and this particular scheme is basically easing the burden of the farmers in paying the premium for such crop insurances, for such crop insurance products. So what basically is happening in Fasal Bima Yojana, and it was launched, as I said, in the first term of the current Modi government in 2016. So part of the payment for crop insurance, which means the premium that a beneficiary has to pay to the crop insurance firm to get his crops insured, a significant part of it would be paid by the government as some kind of a subsidy. So the government would be paying a significant part of the premium that a farmer has to pay to get his crop insured, which means that the farmer would not have to spend a lot of money to get his crop insured. Have a look. How much money would be paid by the government? How much of the premium burden would be taken up by the government? In Kharif crop, the farmers only have to pay 2%. Reduced premium payment load on farmers, only 2%. In Rabi crop, only 1.5%, which means that in this case 98% of the premium is being paid by the government. In this case it is 98.5. So you understand that it is almost in the range of 98, 99. This kind of premium will be paid by the government. So this is the kind of significant premium load, premium burden which has been taken up by the government. In case of commercial crops, however, the contribution of the government towards premium payment would be relatively a little less, a tad less, and it would be around 95%. 5% will have to be paid by the farmers. Similar is the case with the horticulture crops, fruits. Commercial crops, tea, coffee, jute, cotton. So these are all commercial crops. In both these cases, 5% of the premium would be paid by the farmer, while the remaining would be paid by the government. So this is what the government has been doing in the last 4 or 5 years. The whole objective is that more and more people, more and more farmers should be incentivized to go for crop insurance, so that even if there's a problem with the crop gets damaged because of various reasons, even then the farmer's livelihood, the farmer's family's livelihood is not endangered. He is still able to survive. He is still able to meet his both ends meet in the event of a crop failure. So that is the main objective behind bringing this particular scheme. Now let us talk about the Agri-Export Zones. Now this concept was introduced for the first time in the EXIM policy, export-import policy in the year 1997 to 2001. Basically, so there was a particular EXIM policy formulated for this 5-year period, and Agri-Export Zones were introduced for the first time under this particular EXIM policy. What is the main objective? Have a look at the main objective: to raise and diversify farm incomes. To raise and diversify. The idea is that the farm incomes could be increased and then they could be diversified. Up till now, farmer was only and only dependent on selling his produce in the market. But now, if you are incentivizing some kind of a processing industry in the close vicinity of the village, where the farmers can go and get their crops processed into a more valuable form, naturally, rather than selling simply to the intermediaries, they can now also sell to these agri-processing units, agri-processing industries. In this sense, their farm incomes get diversified. They have basically more avenues to earn income from. Okay, what happens in an agri-export zone? A particular geographic region is demarcated for agriculture-based processing units. So some geographic zone is there which is demarcated for agriculture-based processing units. So those units which process the products which are obtained from the primary sector, or which use the produce of the agriculture sector as a raw material. These could be units which are producing pickles, jams, juices, and so on and so forth, or biscuits for that matter. Wheat is processed into biscuits, or sugar is also being processed into biscuits. So these are the kind of units which will be encouraged under this particular scheme, and there would be collaboration between the state government, the agriculture universities, and other agencies to provide credit and extension service. I hope now we have understood about the agriculture extension service and the marketing extension service, so we are not going to discuss them again. But the credit is also being provided to the farmers. So all these entities are clubbing up, they are coordinating with each other so that they can provide easy access to credit to the farmers, and they can provide extension services, which means better technology. The farmers can be trained in use of better technology, high yielding variety seeds, better performing or less polluting pesticides and fertilizers. So these kind of extension services are being provided apart from the credit to the farmers, and this has been possible only because of the collaboration between the state government, the agriculture universities in the nearby region, and other agencies who are involved in rural credit. More than 45 such zones have been earmarked. Well, the basic objective is to increase exports also, and that is why they are called agri-export zones. The objective is that value-added products, the raw material has been provided by the agriculture sector, then they are processed into better value products by the processing units set up in the near vicinity of the village, and thus we are getting value added products. They would be exported to different foreign countries, and this way the farmers and the farming sector would also contribute to earning of foreign exchange. Then let's talk about the financing models which are there. First model is called the self-help groups. We have been discussing, I think probably this model has been discussed earlier also. We'll have a brief look at that now. Self-help groups are groups with 7 to 20 members. So in that sense, they are small groups. 7 to 20 members are there, and some of the members, they also hold the various offices, which means they could be the president of the self-help group, they could be the treasurer or the vice president or the secretary. So these kind of offices are also held by the members of the group only, and depending on the based on a consensus or based on democratic voting, they decide their office bearers. Then what will happen, the members would contribute their savings. So in that sense, self-help groups also are promoting thrift. So members would, whatever small savings are there, small amount savings, it could be 5 rupees per day, or it could be, let's say, 100 rupees a week. So these kind of savings are being contributed by the members to the self-help group. And then the corpus that is actually obtained by the contribution made by the individual members. So whatever the corpus, that can be used for lending to the members. So some of the members in the group might have some they might have been facing some kind of an emergency. So they've all contributed their savings, and whenever a particular member or maybe 1 or 2 members, they face some kind of a issue, they have some kind of a problem, they want to have credit to invest in the next cropping cycle, or to probably get their sons and daughters married, or to maybe survive in a year when the rainfall is very scanty. So all such cases, whenever the members require some credit, the self-help groups lend the money which has been collected from the members themselves. So that money, the corpus that is formed, that is then used for lending to the members who need loans, who need credit. And many times they are also linked to banks for delivery of microcredit. What do we mean by this? Microcredit, I have told you earlier also, less than rupees 50,000 is basically considered to be microcredit. So what will they do? They will enter into collaboration with bank. The bank is not going to lend directly to some beneficiary. The bank is going to lend to the SHG, the self-help group. And the money which has been lent to self-help groups, the self-help group, with the permission of the office holders, office bearers, can then further lend it to the various members of the group. And this amount that would be lent to the groups, to the members in the group, that would be very, very small, and that is why that would be called microcredit. It could be less than 50,000. It has to be less than 50,000 to qualify as a microcredit. This is fine. So this is how the whole thing operates. Many of the self-help groups, they are encouraged to take up business ventures to augment and diversify their income. So they might be having, let's say, they might be producing pulses in their fields, and up till now they were selling these pulses in the mandis, but now they are encouraged to set up their own pulse processing units or pulse packaging units, or to brand their produce and to sell that into the market. So such business ventures are also undertaken by some of the self-help groups, and that tendency is encouraged by the government. And how do the governments encourage this tendency, this kind of practice? By providing subsidy. So the self-help groups are provided subsidy whenever they avail loan for such purposes, for setting up their own enterprise, for setting up their own small businesses. If they are availing loan, then in that case the government also provides part of the government basically pays part of the borrowing. So it might be paying 20 to 25 to 30% of the money that has been borrowed. So this is the way in which the government actually incentivizes the self-help groups. Now let us talk about this financing model, which is Kisan Credit Card 1998. You have probably read about the credit cards. Credit cards are, instruments through which you can avail credit up to a particular limit which has been set in the card, and then you have to pay interest as per the conditions which has been mentioned. Basically, you can you are going to use credit cards when you have already exhausted whatever your savings are. So you have already exhausted your savings, but you still need some more money so that you can purchase some more items. Then you will go for a credit card. Likewise is the case with the Kisan credit card. The only difference being, while credit cards are meant for consumptive items, they are meant to fulfill consumption desires, consumption requirements. Kisan credit cards are basically meant for fulfilling the investment requirements, the crop investment requirements of the farmers. So they want to invest, they want to, let's say, buy more, or let's say better working, more efficient machines, agriculture implements. They want to buy better quality seeds or maybe fertilizers and pesticides. So in such cases they can make use of the credit which is made to them available through the Kisan credit cards. Now for the first time the concept came to being in the year 1998. The target beneficiaries were farmers, tenants and SHGs. Farmers could be individual farmers or joint farmers who have pooled up their land resource and they are doing cooperative farming. Then there could be tenants who are basically working on some others field, basically working on the fields of the landlord, and the SHGs, the self-help groups. Now loan amount would depend on the cost of cultivation, how much money you'll have to incur, how much money will the farmer income to cultivate crops, farm maintenance costs, which means taking care of the quality, taking care of the soil profile, soil nutrition, taking care of the soil erosion, use of pesticide to keep the pests away or to keep the weeds away. So these are all farm maintenance costs. So that would also be included in the loan amount. And the post-harvest expenses, how much you have to, what all expenses you have to incur once the crop has been harvested. So all these kind of expenditures which will have to be incurred by the farmer, the loan amount will cover up all these expenditures. So the loan amount would be decided after looking at each of these three aspects, after finding out the cost involved in each of these three. Accordingly, the loan amount for a particular beneficiary would be decided. Now, interest rate generally is 7%, simple interest rate. Now it is not even being compounded, so you can have an understanding of the kind of lenient credit terms provided to the farmers through the Kisan credit cards. The interest rate is 7% and calculated as a simple interest. It's not compounded, which is the case with most other loan products. Then there is an interest subvention also, 3% for prompt repayment and 2% for loans up to 3 lakhs. What do we mean? The interest you would not have to pay interest of around 3% if you pay on time, which means the effective rate of interest for me as a farmer, if I'm repaying the loan on time, is just 4%. I've been told 7%, but 3% would be returned to me because I'm making the payments on a regular basis promptly. So 3% of the interest would be returned to me, right? So 3% of the interest means that the interest rate would basically now effectively be 7 minus 3% is equal to 4%. And within that also, if the loan amount is less than 3 lakhs, you would be given a further subvention of 2%, which means if I am availing a loan of less than 3 lakhs and I am making the payments promptly, my effective rate of interest which I'll have to pay is 7 minus 3 minus 2 equal to 2%. So you can have an understanding of what all the government and the banking regulator and the various banks and the allied firms are doing to improve the access to credit for our rural community, for our farmers. No collateral security has to be furnished up to a loan of 1.6 lakhs. So if you are looking for a loan of more than 1.6 lakhs, then only you'll have to furnish a security. Otherwise you don't even need to furnish security. And the tenure many times is 1 year or more. So the tenure is 1 year, and the most important aspect about this is repayment period as per anticipated harvesting marketing period. So if you talk about the Rabi crop, it's grown somewhere around October, November, and it is harvested somewhere around March, April. If you go to the farmer asking him, if you have made a loan available to him, and then you go asking him for repayment in the month of January, the farmer may not be able to repay because his crop is yet to go to the market and get sold. However, in the month of March, April, when he has harvested his crop and he has sold this particular crop in the market, he will be able to repay the loan, and that is why the repayment period has to be tuned to the anticipated forecasted harvesting and marketing period. So it should coincide with the harvesting marketing period, because that is the time when the farmer has some money to repay the loan. Now have a look at this very different provision of the Kisan credit cards, which makes it a very different, a very unique and a very useful product for the farming community. And I hope you remember that I discussed this particular aspect when I was talking about the product mix in the rural markets, and I told you that you have to modify your products to suit the needs of the rural customers. And this is what our government and the regulatory agencies, banking regulator and the various banks have done. They have modified their product, they have modified their pricing to suit the requirements of a farmer, and they are charging him, they are asking him for the repayment not every single month but after every 6 months, because that is a time when the farmers are harvesting their crop and selling them in the market, and they have the money to repay the loan. Okay then, with this we have concluded this particular unit on rural finance, and please be ready for a test very soon, the weekly test on this particular unit. And after we are through with the test, we'll be starting our discussion on the last unit that is there about rural cooperatives. Till then, enjoy your reading. Thank you.